The biggest tax cut you'll hear about from July 2026 is worth a maximum of $268 a year, about $10.30 a fortnight. Most people assume it's a few hundred extra per pay, but the real mechanism is far narrower than the headline. Stick with me and I'll show you your exact saving by income, plus the 2 other measures that are actually worth more than the cut itself. Here's the simple version. From the 1st of July 2026, the tax rate on income between $18,201 and $45,000 drops from 16% to 15%, according to e-tax. That's a 1-cent reduction per dollar, but only inside that band. Everything you earn above $45,000 is completely unaffected by this change, which is exactly where the confusion begins. The whole cut lives inside one band of income, from $18,201 up to $45,000, a width of $26,800 according to e-tax. 1% of that band is exactly $268. Think of it like a discount that only applies to one shelf in the shop. No matter how full your trolley, the saving is capped at what sits on that single shelf. If you earn under $45,000, you don't get the full cut. Only the part of your income above $18,200 qualifies. On $30,000, just $11,800 sits in the band, so your saving is $118 a year, according to e-tax. Think of it like filling a measuring cup. If you don't reach the top line, you only save on the part you actually poured in. On $40,000, $21,800 sits in the band, giving a saving of $218 a year, according to e-tax. Push above $45,000 and you use the whole band, so the saving locks at $268, the same figure whether you earn $60,000 or $250,000. Think of it like a bridge toll that costs the same whether you drive a hatchback or a semi-trailer once you're over the limit. Let's compare directly. Under the old 16% rate, the most tax you'd pay on that band was $4,288 according to e-tax. At the new 15% rate, it becomes $4,020, a difference of exactly $268, and not a cent more no matter your total income. Think of it like your phone bill dropping by a fixed few dollars, real over a year, but not the windfall the headline implied. There's a second lever people constantly confuse with the bracket cut, a $1,000 standard deduction for work expenses, planned from the 2026 to 27 year, according to H&R Block. But a deduction reduces your taxable income, not your tax bill dollar for dollar. At a 30% rate, a $1,000 deduction only cuts your tax by $300. Think of it like a coupon that takes money off the shelf price, not cash straight into your hand. Then from 2027 to 28, a $250 working Australians tax offset kicks in, aimed at over 13 million workers according to the federal budget. Unlike the deduction, an offset comes straight off the tax you owe, so this $250 is worth the full amount. Think of it like a gift card applied right at the register. Here's the catch the headlines gloss over. When you see a $1,000 tax cut promised for average earners, that's confusing the deduction amount with the real tax saving. Official guidance from H&R Block explicitly warns against this, and it doesn't stack. If your genuine work expenses top $1,000, you'd claim those instead, not the flat deduction. If this kind of plain English breakdown is useful, subscribe. There's one like it every week. Before I get to the last and most counterintuitive part of this, here's the trap. The standard deduction only helps if you're currently claiming under $1,000. If you only claim $400 today, switching adds $600 of deductions, worth roughly $180 in tax at 30%. According to H&R Block. Think of it like loose change left in an old coat. It's yours, but only if you actually check the pockets. Here's what it means in practice. Take Sarah on $60,000. Her bracket cut is $268, plus about $180 from the deduction and $250 from the future offset, totaling roughly $698 a year, drawing on e-tax, H&R Block in the budget. That's more than 3 times the $268 most people fixate on. But only if she understands and claims each piece. Now stretch that $698 a year across 31 years to retirement, and it compounds to around $21,600 in lifetime tax savings, based on the combined official figures. The difference between understanding these changes and shrugging at a $200 cut is real money. Think of it like watering a plant each week. Every drink is tiny, but the growth over the years is what you actually notice. So check your own income against that band and work out your exact saving before July 2026 rolls around. Next, I'm breaking down the 21.27 cut that drops this same bracket to just 14%, and how it changes the maths again. If you want to catch that, subscribe so you don't miss it.